We're here today to talk on things like how do we navigate risk, fraud compliance in banking and fintech world? What are the guardrails and mitigation approach that could be used? We have curated some questions, basically taking inputs from industry, and we would be talking about those pointers today. For that, let me quickly invite Raghavendra. Hey, I just want to take your views on some of the questions or queries that we've been listening in industry corridors around the theme today. So, if you were to talk about what measures should we take to build a strong risk culture at all levels of the organization, and also ensuring that risk awareness and accountability are ingrained in any company's DNA. If you could just throw some light on that aspect, that'll be great.
Sure. So, coming myself from a risk background, there's a saying within our risk community saying risk is everyone's job. It's not just the job of a risk management team that you have in the organization. And probably the key thing to keep in mind when we say risk is the buy-in that you have from the top. That's the crucial aspect to start off with for you to build anything or have a downstream impact of how the organization itself views risk as a culture within it. So I would say the tone at the top, your senior management has to be bought in. They should emphasize the importance of risk in everything that we do across the financial institutions because it's to do with money, reputation, regulatory. You have a lot at stake if your risk is not managed proactively. Probably another aspect, along with your buy-in from the stakeholders, is have a strong governance framework within the organization also. Along with the framework, you have the right tools, technologies, champions. Risk champions is one of the things that I have seen work across multiple financial services, wherein you have that ingrained and you have that being constantly pushed as an agenda in everything that a financial services or a banking institution does. So those are some of the key aspects wherein if anything changes from a risk standpoint, because given we are in a risk age, a lot of new things that's coming in as a risk with AI, ML, Gen AI, it's always crucial that you have corresponding trainings and educations being imparted for your employees on how to assess new kinds of risks also. So that's where it becomes much more crucial, wherein you have a good buy-in from your top, you have good governance frameworks, you have regular audits, periodic check-ins, risk champions who embrace that culture of risk within everything that we do within an organization, and not the least one probably having that cross industry collaboration within your peers of how they are looking at risk, what are some of the things that you can learn from them is also one aspect we see wherein we can learn from our peers rather than do a trial and error within our organization.
Now, if you were to throw some light on how do you manage this by having a collaborative approach with regulators or industry peers to basically understand the best practices so that you don't fall behind in terms of the need of the hour and yet stay within the risk, appetite. If you could just talk about your experience.
Sure, and that's one of the critical aspects that we have been seeing in the last 2 years, with a lot of regulations being come across with the advent of AI, Gen AI into everything that we do from a financial services or from a banking service standpoint. Also, few things that hit the chord in terms of what we can do about either stepping or staying close with the regulators is all about having that regular connect with the regulators, because end of the day, as and when your regulators keep on changing your regulations, it's always good to have that regular connects, more proactive connects rather than a reactive connects, wherein you are hand in glove with the regulators, have an open dialogue. Hey, look, there's something new that has come up in the market. These are some of the things that we see as an open risk. This is a new regulation that we are trying to bring in to control or mitigate it. How are you trying to change your processes or the way you do business itself, right? Having that open dialogue always helps. And also, one thing that I have noticed across is there are a lot of industry forums or more like a working groups across, say, like I could be from JP, Vidhya could be from Stanchart. So you have a lot of industry connects wherein you can share learnings, you can see how are you trying to uh, bring in a particular change due to a new regulation that has come in. Learn from your peers also. That also comes in very handy. So it's all about not just trying to do everything on your own. Like I said, learn with your industry peers, see if there are opportunities wherein you can pick up some of the best practices or some of the ways the problem would have been solved in a peer organization, learn from them. That makes it much more easier. Knowledge sharing comes in very handy because you, if not everyone has the leeway of trying to do trial and error. Learn from your peers, imbibe it, have that open culture of sharing it also, and have that open dialogue with the regulators. That goes a long way in terms of how fast you can come their curve from a new regulator standpoint, and also how best you can have a cross collaborative approach within the industry also, given all are within the financial industry here.
So, Ashutosh, if you welcome to the session today, I just wanted to get your thoughts on, how do you ensure robust compliance with regulatory requirements while fostering innovation and agility in banking and fintech operation? What that means is, you need to catch up with the best of the world. You have to innovate, or else you'll be left behind. But while you're innovating, you're exposing yourself to certain unknowns and risks. So, how do you manage both of it, innovating and still being compliant with regulatory requirements? If you could.
When we talk about like how compliance and regulatory requirements right go hand in hand with innovation, because this is the age of innovation, and it's been going on for the past few years, and it's just uh, rapidly right increasing in speed and agility. So having said that, being part of a banking or a fintech organization, right, we are bounded by certain constraints. So keeping that thing in mind, there are a few things that come to my mind in terms of ensuring compliance and regulatory commitments are well balanced with the innovation, the pace of innovation that we are fostering, right? So one is, of course, compliance cannot be an afterthought. I mean, what I mean is you cannot launch a product and think, okay, now what are the compliance or regulatory requirements on top of that, right? So it has to be like uh, driven top down. Compliance is the priority. So, fostering a culture of compliance top down, making sure all the members of the organization understand, right, the implication of compliance. Why is it important, especially in the banking and fintech industry, and how they should make sure like they have uh, gone through all the trainings and the resources that are required, and they understand the compliance really well. Second is, I think Raghavendra also touched upon what is that the regulators are looking for, right? That's very important, right? Because see, with this geopolitical situation, there's a lot that's happening in the world, right? Within the different geographies, right? We are seeing different regulators are coming with different policies and procedures. Now we have to make sure we at least understand those policies and procedures, right? The regulatory commitments for a particular country, let's say US, or a state within US, let's say California. We have policies like CCPA there, right? We adhere to those guidelines or guardrails, right? So the information, the knowledge about those regulatory intelligence, right, is very important. We need to understand what the regulators are looking for, what are the key controls they want us to put in our processes. Third is we also need to foster a collaboration between the different functions within an organization, especially a banking sector, like your risk, compliance, operations. They have to go tie tie up together, right, as one unit whenever a new product or process is being launched, right? Because and we miss something in one of the functions, it can have an implication on the other. Right? So the cross-functional teams, they play a very important role in ensuring like we abide by all the compliance and regulatory requirements. The fourth, what I would talk about is use of new age tools. All right, so compliance, risk controls, they can be pretty manual in nature, and even to get to a point like we are compliant with a certain policy procedure, it can take days, if not weeks or months, right? For any team that's working on it manually, it might take. So how can we leverage the new issues, AI, ML, right, in terms of understanding like what these regulatory documents are? Mostly they are like hundreds of pages, right? Somebody skimming through that manually, it will take a lot of time, right? And also prone to error, right? In manual interpretation and all. So can we generate some AI, right, engine that can skim through that, right, document and highlight like these are the key points that any process that or a product that we're launching, the process around that should ensure like they are being abided to.
Vidya, welcome to the session. Vidya is a VP for AI strategy and business planning at Stancy. And Vidya, I wanted to draw your attention to one of the questions and get your responses here on is we spoke about compliance first with Ashutosh talking about how compliance is should be embedded. I also wanted to understand from you what strategies can be implemented to basically detect and prevent fraudulent activities, particularly in the digital realm where risk is evolving rapidly. I mean, the clear case of fraudulent activity on the digital space is your deep fakes, your credit card frauds, and stuff like that. So, how do you think what strategies would be right to implement and detect such fraudulent activities when we are going, digital first or tech first as an approach?
That's a very interesting question, Ashish. Thanks for that. Thanks for having me. It's a good place to be. Well, fraud detection and prevention is somehow very close to my heart. We see a lot of trends. I would start probably from the trends that we are seeing, or that are anticipated to grow in 2024 and beyond. The foremost one that I see is synthetic data, synthetic identity fraud. Identity fraud has always been a critical fraud loss for the banks and the financial institutions in the past. But of late, we have seen this, increase because of, it's also called the Frankenstein fraud, right? Where real and fake information, they are merged together to create a new identity. So you will not even be able to identify whether it is all real data or it's completely fake. Especially when you see that articles coming out from Forbes predicting this loss to be more than 5 billion in 2024. Financial institutions are little on the edge. The second heightened fraud case is how AI is being used to drive cyber attacks. Not only us, that the organizations are trying to use the AI, but we see a lot of fraudsters who are also using the AI to do a lot of cyber attacks. This involves a lot of sophisticated, advanced machine learning and algorithms, to identify especially the vulnerabilities that are there in the network, and also they try to predict the patterns, where the package can enter and where it cannot, and that that weakness is exploited by the fraudsters, the bad actors.
What excites me or amuses me is the concept of crime as service. I mean, look at
Yeah.
these bad actors, how they are sort of cross-pollinating, bad stuff across. So that's a new term for me, and I'll definitely dive deep after the session. But beautifully summarized. So let me bring in Nishant, who's also a chief AI officer at Mirae Asset Global Investment. I just had one question for you. If you could please share your thoughts around, you look at this increasingly interconnected global financial landscape, right? And how can we organization or industry practitioners effectively manage risks around third-party partnership? So how do we manage risk associated with third-party partnership, supply chain vulnerability, and also the current geopolitical impact, which sort of brings in more sanctions, restrictions, and how do we be relevant to these regulatory frameworks? So Nishant, if you could just give your thoughts on it, that'll be great.
Yeah, thanks, Ashish, for this interesting question. And I also heard what Vidya said and Ashutosh said, and I think they covered a number of topics that I was about to say. But yes, so this question is very apt for the financial services industry, more so because this sector is highly regulated as compared to any other sector, like healthcare or say telecom. we are playing with people's money, and hence it is important to build and sustain the trust that our customers have put on our solutions. Especially in global financial firms which cut across geographies, there is a need to comply with the local jurisdiction. Uh, and I think Ashutosh, like he covered, some part of the compliance regulations. Uh, and the reason is the regulatory standards and frameworks are not exactly the same in every part of the world. Uh, and hence, it is very important. Now, where Vidya spoke about being able to share data and models, say within a firm. So while there is substantial benefit in sharing data and models across various entities within a firm, we need to carefully study the respective regulatory framework and the individual local laws that each entity may have to adhere to. Because the entities are almost like a different company within a company. I mean, if you look at Citi, Stanchart, any of these firms which are operating globally, so they have different business entities who are like tied together in a very thin line. Uh, the other point which is important is there is a high cost and effort involved in building AI platforms and especially Gen AI platforms. And it makes good business sense to leverage partners and vendors. So we have realized this, but there are still concerns around the sensitivity of data and the content being used to build these models. Uh, the other question is who retains the IP, while leveraging partners is an important question to be addressed. While the financial services firms, they ensure that there is a proper data model and risk governance framework built within their firms, how do we ensure that our partners have a similar governance frameworks at their end? The regulators today are being more and more cautious. In fact, they are way ahead of some of the financial services firms. They in fact hire people from the financial services firms, so they are very aware of the risk in leveraging third party partners and especially vendors across different geographies. And these regulators are coming up with audit mechanisms to ensure that proper data model and risk governance frameworks are established even at the vendor end, which was not being done, say, a few years ago. Like it has started, now. The last point, which is very important, to address your question, which I would want to, bring here is, see, it is important for us as AI practitioners to understand and decide what part of the AI work needs to be done in house and what can be outsourced to a vendor or to say, remote countries. As there is a difference in outsourcing AI as compared to outsourcing tech. We have been outsourcing tech for last 2-3 decades. But the fine line is we need to understand that AI is very core to the financial services business, and every firm would want to retain control over its AI model. And and hence what could be done with your generic tech may not be possible with AI. So with these three aspects, I think I've tried to address your question, Ashish. If there is any follow-up question, I'm willing to take. Thanks a lot.
No, this is quite useful, and I know this happens in Roundtable. When you go late, most of your exciting points are already taken. But then I think the way you summed up is quite interesting. I think it's need of the hour that while we go behind the most shiny object in the market, we need to make sure that we are responsible and we are staying within the risk framework. I mean, and there's a concept around risk being uh, responsible about AI, and there are strategies where organizations are setting up COEs, which is mostly taking care of AI being used in a responsible way, protecting IP of an organization and domain expertise. Using third parties, you're exposing your domain and your business source, which can then be monetized. And you can govern this by NDA and whatnot, but then the knowledge is out, and that can be packaged and bundled in a very different ways. So all valid points. Thank you so much, Nishant. I really appreciate it. I know we are top of the hour, but I just wanted to take one few seconds response from Vidya and Ashutosh on one question. We have answered that in simple ways, but I just wanted to take very pointed response on. Um, we're using technology for real-time prediction, threat analysis and all of that. But do you think there are any other aspects of using data analytics and emerging tech to basically enhance risk assessments, fraud detection, and compliance monitoring in real time? I know we spoke about it in bits and pieces here and there, but is there any additional points that you guys would want to leave for our audience today?
Definitely. So we are talking about AI and ML to provide us with the way forward, which we were not able to, not at that scale, not at that level of sophistication, which were possible in our macro days, right? We were discussing this offline also. So the compliance monitoring, real time, and your fraud detection and risk assessment, all these are very much possible using your data analytics and AI technologies. I did mention about a common place, a centralized data where you can, even within the organization, which can help you to do that. So one of the methodologies that you can actually do this centralization is using graph database. This is again a topic close to my heart because it allows for real-time visualization of the connections that you can make within the organization, whether the customer has emerged out of India or Japan or USA. You will still be able to make the connections. So not only using the customer name and date of birth, but you can also look at similar patterns emerging from a particular zip code, a particular telephone number which has been used in multiple accounts, where you can detect the application fraud, whether there is a kind of transaction pattern that is emerging out of, say, a student accounts or elderly person's accounts, which can eventually turn up to be a mule, which is a very key component in anti-money laundering. So all these things can be identified in a much better fashion when your data is connected through graph.
Oh, we can hear you all right. Yes. Please
Oh,
go ahead.
okay, I have to remove my Bluetooth. Okay, so I think Vidya covered it well in terms of the fraud identification, detection, and monitoring. I'll just talk more about from the compliance perspective, and again going back to the point, like end of the day, we have to understand what the regulators are asking, right? And we have to read through these regulatory documents, right? And they are in thousands of pages, by the way, right? So while from a business perspective, like catering to this fraud and compliance, like how to put those measures in place, first we have to understand what the regulators are even looking at, right? And one important aspect that I constantly believe we should invest in is coming up with this AI solutions to scan through these documents themselves, right? Like because if you miss even a one point from that document, right? No matter you have solved for 99 regulations, even if you've missed one, you are still red in regulators' books, right? So how do we automate that whole process, right? Of reading, scanning through those regulatory documents, and making sure we have embedded all those preventions in place. Lastly, I would also want to say, and I'll end up with this is, and I think Nishant made a point around regulators. Like, I think we should make friends with regulators, right? I know as an organization we are a bit skeptical over that, but it's important for us to know what the local laws are, priorities are, because it's evolving with each day, right? With the geopolitical situation we are in right now, there's sanctions on individuals, there's sanctions on entities. You don't even know, right, where you're missing any regulatory act, right, for an individual or an entity. So it's important to have good understanding, good relationship with the regulators because they'll help you, right, be true to the regulatory requirements, right, in your whole processes. So yeah, I think it's an evolving world. AI can create problems from a regulatory aspect, but it can also solve a lot of regulatory limitations, right, through the AI Gen AI means.
Yeah, I thoroughly enjoyed our session today. I hope the audience enjoys when they get to listen to this and they pick some of the nuggets that's shared by all of you experts on the session today. Just to sum up, I think compliance is key. Keeping yourself within the regulatory boundary is key because the cost is heavy. I mean, if you mess, you will be sitting in front of regulators and answering them, which can cost the goodwill of your organization itself, and that's not worth the risk taking. So having compliance from the get go making sure you check on the regulation changes quite frequently, be responsible around AI, protect the IP of the organization, make sure that you have uh, real-time analysis of alerts and fraud detection. Use technology to best of your ability, but stay within the framework and governance so that you don't break rules. So I really appreciate your time today, and thank you so much. You all have good rest of the day.
Thank you.
Pleasure being
Yeah,
here.
thanks everyone. Thank you
Thanks a
so
lot.
much.
Thank you, Vidhya and Rajesh.
Thank you.
Thank you.
Thank you.